recording. So anything you may see on the show is for educational and entertainment purposes only. It's not investment advice. Please do your own research. All investment comes with risk. If you're not able to mitigate the risk, please seek financial advice from a professional financial advisor. If you are after a financial advisor, please contact me and I can point you in the direction of one that I'm working with. Once again, yeah, do your own research. That is the most important thing. Okay, so let's get into it today. We're going to start off with the altcoin updates. And as you probably may have seen, some of you, the markets have decided to turn around. Has anyone noticed that? Finally. Finally. I've got these amazing slides. As you know, I do. I take my time out to get these prepared for you. It's kind of become one of my favorite things to do in the week now, guys. I'm not gonna lie. Like you guys turning up on a Monday are actually one of the highlights of my week. So just put it out there. I appreciate you guys. Thank you very much.
Appreciate you.
Okay, let's just wait. Okay, so first slide is just a little bit of basics for anybody that's new to investing or is just starting to take their investing a little bit more seriously. It's just kind of the do's and the don'ts and learning kind of the basics of risk management and so on and so forth. That's just, again, as per usual, showing my slides before I even get there. Just go. Okay. So first of all, number one thing I would say to anybody is invest in what you know and understand. So don't invest in things that you don't understand, because then you don't know what the risks are. You don't know how and why you can be potentially taken out. Dorian, you got a question? Just so you raise your hand. Holla, holla.
Oh, no, sorry. I think that was an accident.
No worries. Next one for a beginner. For beginners should definitely not try to time the market. The best thing to do for beginners is dollar cost average, which is basically put in the same amount of money into an investment month in, month out. Now, on top of your dollar cost averaging, that's when you can then start trying to time the market. Next, we've got diversifying your investments. It's important to diversify your investments, not in just property, not in just stocks, not in just crypto, just because different markets go up, different markets go down. Next, pay close attention to fees and expense ratios, because that's where you will get smoked. Let emotions take the lead. Do not allow your emotions to get the better of you. And don't wait to start investing. Start investing now, today. If you've got £5, you can invest for as little as £1 in cryptocurrencies and into stocks. So it just makes sense to make your money go to work for you. If you are working hard for your money, don't just let it sit in the bank and rot and decay with inflation, which we're going to discuss today. Let it start working for you. And investing for the long term. Statistically, most investments that are held for a 10-year period are profitable. Now, when in doubt, start with index funds. That's your NASDAQ and S&P. Don't take unnecessary risks. Have an investment goal. Don't speculate with more than 5% of your money. If you're new, is 2 years in the game. If you've got more than 2 years in the game and you've been through 2 market cycles, then start using more than 5% of your disposable income. Otherwise, don't do it. You're going to get hurt. And again, 5% of your allocated plot can be to really high risk investments like Doge and SafeMoon. I didn't say that. I still don't approve of them, but I know you're going to do it regardless of what I tell you and what I say. People don't listen. And they're Jamaican saying, those who can't hear must feel. So hold the winners, cut the losers, and don't treat investing as gambling. It is not luck. I've had a couple of really scary conversations with people, and people trying to tell me that investing and like crypto is just gambling. You don't know what's going to do what. And I'm like, well, yeah, if you're not doing any research, of course it's gambling. So again, do your research. So in terms of this week, the reason why this week we are expecting a crazy run up in the stock market is because tonight we have none other than my favorite earnings report of the year, Tesla. So if you've never read an earnings report before, this is probably a really good earnings report to read. They've got really great earnings reports, really simple, great presentation. Just simply go onto Google, type in investors relations and type in Tesla, and you'll be able to get their earnings report from tomorrow morning. Next, we also have EY Lilly, who've got the COVID vaccine, Raytheon, UPS, 3M, who've been making masks. We've got Fiserv, which I've got the world's largest payment gateway provider, who I'm also in partnership with. So if you know anyone that's got a business and they need chip and pin devices, let me know, sort them out. Then we've also got Microsoft and Google and Visa and Amgen, who also another vaccine provider, and Starbucks and AMD and Capital One and Pinterest. Then on Wednesday, we've got Shopify, Boeing, Sony, Spotify, Discovery, Apple, Facebook, Qualcomm, ServiceNow, Ford, and eBay. Then Thursday, we've got MasterCard, Comcast, Thermo Fisher Scientific, McDonald's, Shell, Bristol Myers Squibb, Caterpillar, the S&P reporting, Amazon, Gilead, another vaccine company, Neo, Twitter, I'm running out of breath, AstraZeneca on Friday, along with ExxonMobil and Chevron, and also Colgate-Palmolive. So, and the Clorox company. So all the cleaning and products that would have been used over the pandemic, their earnings are going to be announced. So, wow, earnings weeks. Expect to see some crazy stuff pop off. So one of the things I wanted to touch on again is, as you know, I like talking about diversification, and I like showing people that there is stocks out there that do outperform cryptos. Novavax was one of them. That if you invested £1,000 in March the 11th last year to March the 31st, 2021, you would have had £16,000 now from that £1,000 invested, which is a 1,549% return. And again, the average crypto return of the mainstream coins of the top 25 is around 500 to 1,000. So a 5x to 10x, but we can see here, you can get stocks that are doing a 15x. And as I showed you last week, there's stocks that do 22x, 32x. You just got to know how to find them. Next, we've got Moderna at 401. So that's a 4x. And then we've got Johnson & Johnson and Pfizer and AstraZeneca. So they've not performed as well as the others. Now, one of the things I wanted to also touch on is one of the things that I think is going to start emerging, which is clean, efficient Bitcoin. I think Bitcoin's going to merge into two, and we're going to have people kind of having licenses and stamps saying that their Bitcoin is mined cleanly through efficient energy sources. Because as we can see here, the orange bit is the total amount of electricity used by Bitcoin, and then on the right of it is the country of Norway, and just above it is the country of Bangladesh. So we can see how much energy Bitcoin is using in comparison to other things. This on the left hand side by the USB pen is actually the world's data centers, and then here is the state of New York. So we can see Bitcoin is using up a lot of energy, and it's causing a lot of energy concerns. However, it is actually pushing a massive push towards green energies, solar and wind. And who produces solar and wind? And solar, mainly Tesla. So yeah, very, very interesting developments there. Also, 65% of Bitcoin is actually mined. The mines are actually using renewable energy sources. So it's not all bad and doom and gloom. Now, altcoin updates. Some of the things that have been happening, you may have seen me throw in the group. Some of them you may have not heard me throw in the group. Now, this is one of the biggest things that I think is going to cause mass moves to exposing people's cryptocurrency indirectly. And that is that Cardano is creating integration payments with Now Payments that allows WooCommerce, which is one of the biggest gateways for Shopify, to get their hands on Cardano. Companies that use Shopify, you may have heard of a company called Gymshark. Yes, they originally were using WooCommerce. I don't know if they still are, but we can imagine companies like that actually accepting over 50 coins, including large cap Bitcoins like Ethereum, Binance Coin, and Cardano, to be able to send directly to either a receiver's wallet or to be able to pay for things on Shopify websites. And on top of this, if the customer or the company doesn't want to receive it in crypto, the company will actually transfer it into fiat automatically for them. This is revolutionary. Now, after they've finished after Now Payments is finished with Shopify, they're actually also in partnership with Etsy. So we've now got eBay, PayPal, Shopify, all in the cryptocurrency space. There's only one big major player left in the e-commerce space, and that is Amazon and Walmart. And I'm expecting announcements from them literally in the next month. So you've heard it here first. Let's just see what was said in the chat. Can you give us a few websites where we can invest in companies for dividend? Yep, I'm going to be going over that actually towards the end of the call today. That's actually what this call is about. It's about REIT stocks. So crypto updates. Now, one of the things that I was saying was going to happen is that the big companies, as we know, are putting 1%, 10% of their cash into Bitcoin. I was expecting them to start doing it with altcoins and with ETH. And what happened this week? Deutsche Telekom invested in blockchain payments through a company called Celo. And if we look at the total cryptocurrency interest, the Google searches over time, they are at a all-time crazy high. Now, one of the things that I also noted, which I found quite funny, is that the head of the New York Stock Exchange said and decided to come out and say he actually thought that crypto is an amazing space right now. It's the best kept secret in the world and maybe the history of the financial markets. Coinbase today is the 8th largest exchange in the world. What's funny about this is that he actually invested in crypto in Coinbase in 2013. But yeah, this whole time was probably telling people to stay away from crypto. Isn't that funny? That's going to be a recurring theme in today's episode. Just finding out who's saying what. Now, Ethereum transaction volume is at a 3-year high. If that isn't a sign that alt season is upon us and that people are getting into the alt and buying up the Ethereum because it is the possibly most important cryptocurrency out there, because it gives you the keys to all the doors, then I don't know what other evidence you possibly need. Next, we can see that crypto convert JP Morgan is also hiring developers that are skilled in Ethereum. Ninja, holler at your dad, because he's a Ethereum developer. So JP Morgan.
Yes, sir. Yes, sir.
So then we can see the total transaction volume. So yeah, let's just go back to the JP Morgan bit. They've not opened one position. They've opened 64 positions for people experienced with blockchain development. Do you think JP Morgan might be opening up their own coin on the Ethereum network? Say no more. Anyway, Ethereum's daily transactions volume exploded to start 2021 with a total of 1.5 trillion transactions settled in Q1. 1.5 trillion in transactions in one quarter from a previous year of 116 billion. Hello, how do you go from 116 billion to 1.5 trillion and people still don't think that this thing's serious? Like, really? Like, all the adoption is there. Now, people have been telling us that Ethereum is dying, that crypto is dying, that Bitcoin is dying. And again, I want to take this time out, like I do every week, to just shout out the fake news weekly, because we always have a bit of fake news and a few companies spewing us some crap about Bitcoin being bad and about ETH being bad. Meanwhile, they've probably got it, like I've shown every single week. So in terms of Bitcoin, everyone's panicking. Oh, Bitcoin's dying. Oh, it's over. Oh, even I did a little bit on it last week about the hash rate and stuff like that. But we can see it's kind of a normal thing. In the last year alone, since this diagram is since 2016, minus 38%, minus 38%, minus 33% in 2017. Then from 2017 to 2018, minus 38%, minus 6%, minus 29%. And in this year alone, we've seen Bitcoin do this. January, minus 31%. February, minus 26%. March, minus 18%. And now in April, minus 20%. Each time people have said, this is the end of Bitcoin. Now, what I wanted to do is I want to expand on this because I think it's quite funny how ridiculous some of this fake news is getting and how bad the paper trails are if you're good at research. So we'll take this little article here from Unilad. So Unilad claiming that 300 billion worth of Bitcoin was wiped out in an overnight crash. Check the use of language there. Tiny bit of onomatopoeia. Crash, making you think of danger and it's all over and people are going to die. This caused the market to shrink from more 2.2 trillion to 1.9 trillion. Yes, they did mention the hash rate, but it's just the use of language. It's just very, very clickbaity. And you don't really get more clickbaity than Unilad. Now, who is Unilad owned by? You guessed it, Lad Bible. Who owns Lad Bible? Liam Harrington. Now, let's find out a little bit about Liam Harrington. Liam Harrington is also his previous position was at Iconic Labs, and he's still a board member. Shall we go and find out who Iconic Labs are? When we go to Iconic Labs, oh, look at that. They've invested in Captain Bitcoin in 2019. Seems like someone was capping literally about Bitcoin. Look, Iconic Labs, what do? They're actually a venture capital fund for blockchain, AI, and other sorts of things. So they're holding Bitcoin themselves and they want to get as much of it as cheap as possible. Does it make sense to scare everybody? Yes. Now, this I found funny, this great website, which shows you how many times Bitcoin has been declared dead. And this is in the last year. This is how many times Bitcoin has died 407 times in the last year, according to website reports. So when it was at 9,000, Bitcoin will drop to 0. When it was at 11,000, cryptocurrency is dead. Bitcoin is still rat poison squared. Bitcoin is over. Cryptocurrencies are far best avoided. This was when Bitcoin was at 12,000. Look, Bitcoin is a massive bubble. Bloomberg, buying Bitcoin is a pure speculation. The price of Bitcoin is being totally manipulated. Bitcoin is a disaster. Those who invest the most will lose the most. Bitcoin has nil value. Entrepreneur magazine, Bitcoin is nothing. The fundamental value of Bitcoin is 0. Look at it. You're buying obsolescence. Wow, crazy. How much cap there is about Bitcoin. You can see the all-time one, which is even more funny. All-time since it began. Was it going to load it? That's what it looks like. That is how many times Bitcoin has died since it was born. All the way from when Bitcoin, why Bitcoin can't be a currency when it was at 23 cents. Why Bitcoin is dying, whatever. Look at it. It's actually crazy. And it looks even more crazy when you look at the curve of what it did. So funny. So then let's go to the statistics. And again, this is not investment advice, but statistically, this is the total drawdowns and the dates that Bitcoin has actually drew down in over time, and the amount that it would have drawn down. And this is what's quite funny. Number of days profitable holding Bitcoin out of 3,905 days. Bitcoin was actually profitable 3,844. So it's profitable days holding Bitcoin 98.4%. Yeah, men lie, women lie. Numbers, unfortunately, don't lie. So one thing that I wanted to touch on again, just because, you know, I like talking about like financial literacy, something I found about high income and high stock ownership. It kind of merges in with us talking about property versus stocks. Just showing about the average household income and how the percentage rates of people that own stock. As you've seen in my course, if you watch my free course, 95% of the richest people in the world own 95% of the stock market. It's a problem. Basically, for some unknown reason, if you've got less than 100K, you're very, very less unlikely to be investing in the stock market or investing outside of your home. 90% of people that are on the planet, their only asset that they own is their home, which is kind of scary. So let's carry on. Okay, let's go to the next slide. Let's go to the next slide. Okay, so this is now going to be a bit of financial literacy before we go on to the next part. Now, again, this is just all in my opinion. This is not investment advice. This is just my opinion. This is not to throw shade at anybody with property, because I myself am going to be getting into property, but I always get asked, why don't you buy a property? And it's because the richest people that I've spoken to all tell me that it's a terrible, terrible idea. So multi-billionaires and multi-millionaires and people that work for JP Morgan and people that work as lawyers and in legal all tell me, nah, Mike, don't do it. So key thing, again, I just have to keep stressing, and you'll see time and time again, is it's not how much money you make, it's what you do with the money that you make. And especially in crypto, we've got a lot of people comparing how much money they're making. And it's, look, it's all good you making loads of money on Dogecoin, on just things, right? But are they assets that you're going to be able to hand down in 10, 20 years time? Are they going to allow you to retire? This is the key question. So let's look at this and break it down a little bit. So in terms of, it's not how much money you make, it's what you do with the money you make. It's about the opportunity cost. So what is the opportunity cost of doing what you're doing? So investing in one thing sometimes distracts us from the better investment. Sometimes there's an opportunity cost of taxes, and there's sometimes the problem of inflation. So let's say, for example, if you was on an 18K salary in 2010 and you're on 22K now, your money is actually worth the same with an inflation rate of 2%. But they don't teach us this in school. They don't teach us that just because you're getting a promotion doesn't mean that you're actually making more money. You could actually be going backwards. Now, if you haven't increased the amount of money that you're making in that time, then you're in a bit of a problem. Now, again, in terms of certain investments, if your investments aren't beating the inflation rate, then it's not actually an investment, it's actually a liability, and it's going backwards. And this is one of the big issues I have with bonds. So let's look at just so you know, I'm not capping, the UK inflation rates, historical data. As you can see, 1.74, 2.29. I took the time out to add the last 10 years from 2010 to 2019 up, and the average was actually 2.24%. So check it out for yourself. So let's go back to the slides. So now let's talk property. Now, when it comes to property, what is the opportunity cost? I personally think there is a massive, massive opportunity cost of when you get involved in property, because it means the money that you've used for your down payment could have been invested into business, into stocks, into other things. And now that money's tied up and you can't get that down payment back until you finish paying for the property. And even still, it means that you are now obliged to make a monthly payment, which means if opportunities do come along financially, you can't actually get involved because your cash flow is now being sucked up by this opportunity. I've probably spelled opportunity wrong there. I am dyslexic. I apologize. Hopefully you can look past that and just look at the information that I'm trying to educate and elevate you with. Now, let's, again, in terms of property, inflation is a problem here again, because if your interest rate on your property is higher than the inflation rate and higher than your pay rises at work, you are actually in trouble, because then your actual payments monthly are actually getting bigger as your salary is actually decreasing. So let's say, for example, you took out a mortgage in 2010. Yes, it was viable for that 18K, but now 10 years later, that 18K is worth around 14K because the price of things has actually gone up. Price of your bills has gone up, price of travel, food, so on and so forth. So you're actually getting less for your money. So it means making those mortgage payments are actually becoming harder, and you're not realizing why. You're feeling the struggle, but you're just like, why is life getting harder? It's actually because of inflation. Now, again, one thing to look out for is 3 out of 10 people get their down payment from their parents, which is coming to an end because the banks don't want it to happen anymore. Because I've spoken to a couple of people that work in the banks and they're telling me it's coming to an end. And because of COVID and parents losing their jobs and not actually having been of the right age to be rehired or having the skill set to be rehired and having their own financial issues with their own mortgages. Now, let's carry on going. So the average cost, let's total it up. And again, I did all the research for you, so you don't have to. The full-time average salary in the UK, 30 to 39, is around 34 grand for males and 30 grand for females. And this has always pissed me off. I'm sorry, but it's just always pissed me off that women get paid less than men. It's just really, really annoying, especially as time goes on. It's just dumb. Like, what do you mean? Like, that's just so dumb. It's like worse than racism. It really annoys me. But anyway, even though women make better investors as well, it's crazy. So I've kind of lowered it down, and I've gone quite reasonable. And we've gone the average person getting paid a salary of £32,000 a year, which after tax is 25,000. Now, if you know anyone, not many people I know, even that have been to university, are actually getting paid £32,000 a year. It's probably more 24 to 28. And that's not after tax. So let's say it's 32,000 after tax. That works out to be around £2,133 a month. Now, average housing and bills in terms of rent. And by the way, I've done all this based off living in Manchester and Birmingham, not of living in London, because your housing and your bills are definitely not going to come up to £750 a month. If you're lucky, maybe in London. Your car payment, again, the average person's got a car that they're paying around £200 to £300. If they've got a Merc, like most people have, an Audi, whatever, once they've got this wage promotion, they'll probably be paying a little bit more. University loans and fees around £150 a month. Food around £250 a month. And again, that's based off Birmingham food prices. I know for a fact food, drink, and travel does not cost £250 a month in London. Phone and subscriptions around £200 a month, leaving people with a roughly £500 disposable income. And now the average home price, again, I've done the searching on that. The average home price is 249K. Got a few things in the chat. Let me just read. I'm moving to Manny. Oh, mate, you will love it in Manny. Mate, houses are literally like 180K. Whereas I know firsthand, a house in London for 250K is basically a box room or a small little hut in someone's garden. Anyway, no shade at London, no shade. But yeah, so with your 500 a month disposable income, if you was paying a 5% deposit, which would be 12,500, it'd take about 25 months to save up. If it was 10% down, that would be 25 grand. That would actually take you around 50 months. 20% down would be about 50,000, which would take you around 8 years. Now, this would be possible if you are on £32,000 a year, and if your bills and everything were those prices, not including you paying for your pension, health or life insurance, gyms, gifts, vacations, or any credit card debt. And this is the trap of what is happening with the banks. There is more and more companies like Klarna offering a buy now, pay later system, otherwise known as what my mom calls it. My mom calls it you're broke now, you're broke later system. Because I was very, very guilty of at 16 buying TVs, PlayStations, all sorts of stuff on buy now, pay later deals. And I literally 2 years ago, finished paying off some of the debt for some of those things. So it took me 10 years to pay some of those things off, which is ridiculous because the interest rates, they ended up going up and 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 up. And things that cost me 500 quid ended up costing me around £4,000 to pay off in total, which is just stupid. So we've got this really bad culture, especially the Gen X and millennials, of got to have it now culture. And it's really driven by social media, unfortunately, and the likes on IG. So when we see someone get a new house, they get loads of likes. When we see someone get a new car, they get loads of likes. But not on when they get a business loan. Someone puts, yeah, I just got a business loan. It's, you're crazy. What are you doing? Don't get me started on the magic picture and how excited everybody gets when you get a picture of you with your degree, which we seem to be celebrating people on social media for getting loans when you think about it, because the degree is a loan. Congratulations, you've just got a loan. Now you've got to pay off. Same thing with the house. Congratulations, you've just got a 250K loan. Congratulations on the car. You've just got yourself a $6,000 loan. When you word it like that and you actually look at what it is, it's kind of scary. And people are doing all this without having pensions and having more and more expenses. And what tends to happen is if people get a promotion and they go from 32,000 to 35 or even 24,000 to 32, they feel like they have more money and they completely disregard inflation, which then means that they end up thinking that they've got more money to spend. So they get a bigger car and they apply for a bigger mortgage, which is actually quite dangerous. So let's look at the cons of property traditionally, and then we're going to look at the pros of traditional property versus REITs. So the killer interest. So on a loan that you wouldn't get otherwise. So this is the one of the key concepts that was taught to me. And my mentor said to me, look, Mike, if you went to get a property for 250K, they would let you put 20% down, 10% down, and even in some cases, 5% down. If you went to the same bank and with the same credit score, the same everything, and asked them for a 250K loan to do whatever you wanted to, or for a 250K business loan, and you was going to put 5% down, 10% down, do you think they would give it you? And the answer was no, they wouldn't. There was no way. So why are they giving you these massive loans on these properties? Why are they doing it? Because of the interest that they're adding. So the average interest, again, done all the homework, so this isn't cap. The average interest is 2.36%, and in March 2020 increased to 2.5. So 2.5 times 20 actually equals 50. So you're actually paying 50% extra for your property. 2.5 times 25 years of paying this mortgage is actually 62.5. So you're paying 62.5% more for your property. And if you're paying for 30 years, you're actually paying 75% more for your property. Now, again, having friends that work in property and having discussed this with them, they say the one thing that is guaranteed with property is things break. It's guaranteed. It's literally impossible to have a house for 20 to 30 years that doesn't need any maintenance ever, which sometimes due to your cash flow, which we've just discussed, you may need a loan or a credit card to get a boiler fixed, to aircon, leaks, flooring, roofing, electrics. And then you've got upgrades, and we've got people getting new bathrooms, new kitchens, new gardens. Instead of using that money and diversifying and trying to like invest that extra 10, 15 grand that they just spent on the kitchen into the stock market or into something else and growing that money and seeing it 100% return on itself, we're adding 15 grand to our property, which isn't going to, it's going to increase the value of the property by maybe another 5, 10 grand. It's not going to increase. It's not adding a new kitchen or a new bathroom or doing up the garden on a property, a 250K property, you spend 15 grand on the bathroom, the kitchen, the garden, isn't going to make this property all of a sudden be worth 100% more. It's not going to take this 250K property and make it worth $500,000. It doesn't quite work like that. Now, on top of that, we've got what happens if you want or need to move due to opportunity or obstacles or lose your job, which is what is happening right now. More people than ever have lost their jobs, can't pay their mortgage. More people than ever have now had to re-educate themselves, relocate, but they can't, and they can't go to the jobs that they want to go to, because unless they're allowed to work online completely, because of a mortgage that they've got. Now, it's not all cons. Oh, no, there's one more page of cons, sorry. So obviously I put things break and you don't know how it's built and you don't know what it's actually built with, if you've not built it yourself, and that's why things probably break. And then ultimately you don't actually own it. So if you miss payments, the bank actually owns it until you pay it off. And if prices crash, say for example on this 250k property goes down to 200k, you still owe 250k. Then the shared ownership deals, they are very, very interesting. Do the maths on the interest of what happens if you're paying 2.5% interest on a property that you actually end up owning only half of. You've paid for the property twice, sometimes 3 times, the whole thing, but you have ended up getting half of it. Banks and the buyer home ISAs, again, just more ways to kind of get a rope and throw it around your neck. Also, the lower down payments. So we're seeing an increase of lower down payments. Why? Because it means you're paying off the property for longer with more interest and probably higher interest rates than 2.5%. First-time buyer schemes, again, they sound amazing, but they don't. Some of them in the small print say that you are not allowed to rent out the rooms in the property. So you've got to always ask why. Why is someone giving me such a good deal? That's what you got to figure out. So this is the most scary bit, is most of the time with properties, because of inflation, if you sell that property and you finally pay off your mortgage, and you say you're 25 now and you're paying off your mortgage for 25 years or for 30, unfortunately, when you actually sell that property for 250k, you won't actually be able to retire off it properly. You'll actually say you sell this 250k property at 50 and your average wage was 25k, then after all expenses, after tax, so you had 25k coming in after tax and you sold your property at 250k, you'd actually be able to retire for 10 years. And this is with no tax on the sale of the property and with no tax and no inflation. Unfortunately, inflation is about to get hella high because of all the money printing. So yeah. So the pros: you own a physical asset. There will always be a need for property, and you'll always have a roof over your head or somewhere to store things. So the other way of investing in property and investing in the stock market is through REITs, which are real estate investment trusts. Now, what are the pros and what are the cons? So we'll go over the cons first. The cons are you don't actually own a physical asset, so you can't touch it. It's digital. It's not like you can't sleep in your REIT. Then the risk of the housing market going up and down, but if the housing market goes down in the stock market, then the housing market goes down anyway. Then we've got lower yield if you are in the position to actually rent out. So yeah, REITs pay out 2 to 10% on their dividends, whereas maybe renting out a property, you'll be able to get maybe 5 to 8% yield back. However, the reason why I put a question mark is, yes, the 2 to 10% is what you get on the dividend yield. However, that dividend is actually increasing over time, and we're going to explore this in a second. Whereas a REIT can grow by 100% in 10 years. Properties do not, very, 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 very rare cases, go for 100% more. And even if they do, if you're getting into property for the rentals, it's very unlikely that in a 10-year window, you can just start charging your tenants 100% more, especially in London. You can't just start charging someone that you're charging £1,000 a month, 2,000 in a 10-year window. Just doesn't work like that. Whereas REITs, That is actually what happens. They increase as much as 100%. The other con is that renting means you're paying someone else's mortgage. That is the unfortunate thing about it. Whereas the pros of REITs is, number one, there's no down payment. So you're not having to fork out 20, 30, 40 grand to be able to get involved, which means that there's no opportunity costs. So that means that that 20, 30 grand, you can now invest that into other businesses, stocks, crypto, so on and so forth, and get returns elsewhere, and then buy a property outright in cash. There is no minimums. So REITs, you can actually get involved in REITs for as little as £1 on Freetrade. If you want Freetrade and you want to have a session exploring REITs, just message me, book in a session. I'll show you how to do that. Next is instant yield. Now with a property, you've got to wait, you've got to find the tenants to be able to start getting your rental income. With REITs, they pay ranging between 1% to 10% and ranging between quarterly and monthly payments. Literally, as soon as, say for example, you invested in a REIT today, you would get your dividend payment next month. Start straight away. And again, the increasing yield, so the value of the stock goes up. Say for example, you get in a REIT and it is $100 per share, and then 10 years later, it's now $200 per share, and you were getting 10% yield back a month. Obviously, it's very unlikely you're gonna get a 10% one on a monthly. So we'll go, let's say you're getting 5% back from £100 per share every single month, right? That's £5 off each £100 every single month. However, if the value of that REIT goes up to 200 or to 300, you're now getting 10 or 15 pounds every single month. Simple math. Now, next is probably the most important thing for me, which is the quick exit. If you want to just say, for example, you do have repairs or something going on in your life that you need the money for quickly, you can just literally go on your phone and sell it and have the money with you in 2 to 3 days. You can't do that with property if you need the money. If another investment opportunity comes along, you have a car crash, need a new car, something happens in family, you need to pay for medical things, to remortgage your house and to refinance your house is a bit of a ball ache. It doesn't take 2 to 3 days. Next is growth, which we talked about. Next is diversification. In terms of REITs, you can be invested in REITs like CenturyLink, where they invest in cell towers. You can be invested in REITs like Realty Income Trust, and they own shopping centers. You can be invested in REITs where they do data warehouses. So it just gives you a wider range of diversification, whereas with property, yeah, I haven't really got that kind of diversification. And again, you can get international REITs. So you could have an international property portfolio with £100, whereas you can't really do that with stocks, with property. And then no maintenance. You're not repairing anything. There's nothing to repair. Next, there's no tenants that you have to worry about, chasing them for rent, sorting out when they've mashed up your place. There's no bills. And most importantly, there is no interest and no anchor. So let's go and have a look on the charts at some of these REITs, because I'm sure you're super excited to do that. I'm going to whiz through some of these really quickly. I'm going to literally just go through them. You're probably going to want to write some of these down. So I've got a total of 30 REITs that I look at. I'll give you the ones that I'm personally invested in. So the first one is Federal Realty Investment Trust. Then we've got Invesco REIT Home REIT Income, which is an ETF by Invesco. Then we've got New York City REITs. So you can get involved in REITs in New York City. But what happened in New York City recently? Oh yeah, COVID. So these REITs have gone from 948 to £3.75. Now, just do the maths. If this is where they were once and this is where they are now, have you got £8 spare to get into property in New York City? Is New York going to stay this low for the next 10, 20, 30 years? I doubt it. I really doubt it. Yes, it's fell off a cliff, but I think we can safely say we can easily see New York property at least 3x or 4x, probably. Just, I think this is one of the most golden opportunities. This is not investment advice, by the way. Next is Van Eck. They've got one. We've got PLD. So we can see the difference in some of these REITs. Some of them have dropped off massively like that. But again, if you're doing your research, then you'll know what's going on. Prologis, these are the ones that do the warehouses for shopping centers. And again, let's just look at this. Whose property from this last year to this year has gone up by 88%? Let's do 10 years. Let's do 5 first. So we'll go from 2015. And look at that. It's only fallen below the 200 moving average once. So that would have been in a 5-year window, a 200% return on property. If we go 10 years, things start getting crazy. September 2008. So that's after the 2008 crash. We're going to go 10 years. So we'll go April 1st, 2011. That would be a 400% return on property. And you would have been paying £20 a share. I don't know if that's a good deal, but you know. Digital Realty Trust, these are the guys that do this data warehouses. Again, let's have a look at them since 2010 versus property. That would have been a 800% return on your property investment, 800% increase on your yield and your monthly payments. So let's say, for example, you had invested 100,000 into this and at 20, and it went up by 800%. 100,000, let's call it 5%. 5% of 100,000. 10% is $1,000. 5% is 500. So for your 100,000, you would have been getting £500 a month back, which is literally like property. Now, from that £500 a month, then times that by 800%. So 500 times 8 is 3,500, right? Is that right? No, 5,000. Yeah, 40. So you would have been getting $4,000 back a month from your original 100K. And your 100K would now be worth 800K in a 10-year window. Please show me property doing that. Next, Realty Income Corp is one of the main ones. Cedar Realty Interest, Crown Castle. These are the ones with the cell towers. Do you even want me to compare this to the last 10 years? $25x. I'm not going to do the maths on that one. You're going to have to do that yourself. But yeah, if you want a lesson on REITs, just message me. So why am I showing this? Because when you take your profit from your crypto, you put it into a stock. Well, this is what I do. I put it into a stock. It grows in the stock. I then take my profit from my stock and I put it into a REIT. My payments from my REIT, I then use to get more crypto. That right there is worth 100 grand. What I've just said.
Game.
That's priceless.
Game.
That's just priceless game what I've just given there. Like, that should not be free game. But, you know, I'm too nice. So let's have a look on the charts at a couple of things and how they're moving. Get your body moving. How often you cash out then? I cash out quarterly and also based on percentage returns. So you'll see on the charts where I've got my take profit points. let's just move these around. So we go daily. So what I'm expecting with Bitcoin based on TA. Wow, look at that spike up. Look at it. Look at it. Base of the Dochan spike up. Exactly. Mad. So yeah, Bitcoin looking quite nice at the moment. So I'm going to put a bit of a hypothesis out. I'm expecting Bitcoin to go to about here, around 70, 72K, and then do a potential 50% drop. Just to completely scare everybody out before it goes to 100, 150K. Either that, or it's going to do it at 100K. So in fact, I need to put in a take profit at 72. I'm going to go. But I've got it recorded, so if it does it, you can call me the Messiah. So watch out for that. ETH, how's that looking at the moment? ETH has turned around. This is the movement I'm expecting on ETH. For it to come up to 25K, dip back down to 22, and then fly to 31K, and then from 31 to 4,300, and then from there to 10K. So you might want to buy up your ETH, especially being as JP Morgan, especially being as everyone's involved. But what I'm expecting, what I'm completely expecting, and why there's been such a push on Dogecoin and on SafeMoon is regulation. I'm really, really expecting this free ride to stop for the normal person. And what I'm expecting is that we're probably going to get to around 31,000. And before things do their actual major push, there's going to be...
Sorry. You mean 3,100, right?
Yeah. 3,100. Sorry. But yeah, I'm expecting either at this point here or this point here, crypto is going to have a massive 50% dip. Loads of people are going to get hurt in loads of different things. And then regulation is going to come in and they're going to make it, one, really difficult to get into crypto somehow, some shape, some way, with rules and regulations and ID and proving how much money you've got. And then crypto will go to, ETH will go to 10K. Same with Bitcoin. Bitcoin will go to around 75, between 72 and 100K, bring in the regulation, and then it'll go to 500K. Oh no, I've got it marked at 200. So this is where the regulation is going to come in, somewhere around here. And it's only going to be because people are going to be getting in on meme coins. So it's bad to say, look, I'm happy for people making their money, but you're just literally building evidence cases for the SEC and the Financial Conduct Authority that people are putting in their money into things that they financially don't have the money. They don't know anything about investing, and they're putting their money into things that don't have a use case, don't contribute anything, aren't actually an asset, aren't actually a business, and then they're losing 50% of their money. That is the easiest way for them to regulate stuff. Easiest. And I've warned and I've warned and I've warned, and I'm happy that people are making money in these coins, but we are just literally building up case files for them to be able to regulate this whole thing. And the fun will stop for everybody. And then we won't be able to get in on the actual big movement up. So why do I say this? Because the same thing happened with the stock market. The same thing. So anyway, XRP from here to £2, expecting that. Or $2, I mean. Then from there to 9. So you can see these secondary take profits that I've marked off. But the regulation is going to happen here. We won't be able to get in on this. This is what I'm really, really worried about. Cardano is moving, as we can see. So everything is just starting to turn around now quite nicely. Swissborg, Beautiful support line. I mean, can you get a better support line than that? Come on. Crypto.com. Now, this is a very naughty crypto that really doesn't like obeying trend lines or moving averages at all. It hasn't dipped below the 200 moving average, although, but it just doesn't like following the rules. However, it has just hit the 72 moving average. So if you haven't got a crypto.com card yet, it's going to start getting pretty expensive to get into crypto.com. I've not marked off a major take profit on that one. Binance. Yeah, take profit on that is 1K. And then major take profit is around 2.5K. Let's look at some of my smaller positions. So Travala is one of my newer positions. Had that dip, got hurt. Now we're alt season, baby. Utility. Ooh, ooh, ooh. Buy low, sell high. So literally, this was probably one of my best purchases. Literally slap bang on the 72, straight on the bottom of the Dochan line. Bang, bang, bang. Someone told me the other day that with cryptocurrency, you don't need to look at charts. They tried to tell me that, like, you don't need to. I was like, all right, then. I showed them trading view. Apparently, they're a cryptocurrency expert because they've been involved with crypto for 3 months. And I showed them, they asked to see my portfolio. So I showed my portfolio on trading view, and they were like, what is that? What are all these letters and numbers? And that's when I was like, yeah, this conversation needed to stop at that point. But, you know, I'm a sucker for wanting to help people. So I carried on the conversation, and it just hurt me more and more. Anyway.
Yo, can I just drop some quick game? Because first of all, like the idea that anybody's a cryptocurrency expert is super rare. I myself don't even claim to be a cryptocurrency expert. I just say that I'm pretty intermediate and know enough. Here's a quick filter. If anybody says they know a lot about crypto, ask them what the relationship between Cardano, Ethereum, and Polkadot is, and if they can't answer that question, they don't know anything. The fundamentals, like they don't know anything. So literally, anyone who says they know about crypto, ask them the relationship between ETH, Polkadot, and Cardano. If they can't answer that question, they don't know anything. And the answer is two of the Ethereum co-founders moved on to Cardano and Polkadot. That is the answer. But most people who claim they know a little bit about crypto or they're in crypto can't answer that, because most people in crypto have no fundamentals.
Facts. And also, most people have no idea what where am I buying REITs? I'm buying them. You can buy them on pretty much every trading platform. You can get them on Freetrade. But drop me a message. I'll do a free one-on-one session with you, and I'll show you how to do it. Explain my ETH prediction again. Yeah, I'll go back to that. And the other thing I was just gonna say was yeah. Ask someone, if they're an expert, ask them to explain IDOs and ERC20 and ICOs. If they can't explain that, then yeah, there you go. That's
I think it's super rare for anyone to actually be a crypto expert, because it's such a new space. Like, yeah.
Unless you've been in it, even if you've been in it since 2017, I don't think you're an expert.
How would you define a crypto expert?
Someone that builds. I would define a crypto expert as someone that has been involved in building the blockchain and working with Ethereum for the last 5 years.
Yeah, that sounds like an expert to me.
If you're not actually building the blockchain, then you're not an expert. It's just silly. You're just like we're all observers, because we don't know how to build the blockchain. We haven't got our own blockchain. So what is my ETH price prediction is, because I mapped out an Elliott wave before. I'm going to remap out my Elliott waves on all of these very, very soon. So again, if you missed one of my sessions, there's probably got a video somewhere on Elliott wave. but it's mainly using the Fibonacci retracements and Fibonacci extensions as well. So if we do the auto fib, I don't know if it'll show it on the auto fib, but after this, Ninja, I'm going to hand over to you for you to spit some more game. So yeah, we can see here on the auto fib extension, the prices so the major numbers on fib are 1.618, but in crypto it's actually the 4.236, just because of the volatility is the major extension point that we're looking for. But to really understand fib, again, it's going to take me a bit of a while to explain that on here, so you'd have to hit me up and I'll do a free session with you and explain it. So yeah, Ninja, over to you. I've done enough on REITs, so I'm not going to really touch on any more stocks. So let's go crypto. If there's anything you want to talk about crypto-wise.
No problem. So I'll be completely transparent with everybody in this room. I have spent the last week reaping the fruits of my labor and enjoying the sun, and I haven't made a single new investment. I'll be completely honest with you guys. It honestly gets like that, and the reason why I want to tell you that is because I think people are just addicted to checking charts and reading the markets all the time. So let's make this an open Q&A. I do have a few gems with regards to what I believe is going to do really well. Not financial advice. I'll drop like 5 coins, but let's take, yeah, I really love Q&A. And we've got a lot of people in here. Let's go. What's up, guys?
I think we need to do forced Q&A because that works better. So just pick people and I'll unmute them.
Oh, forced Q&A. All right, cool. Let's start with Emmy. I don't know who this person is.
Yeah, we'll go through all the new people.
Yeah, I don't know who Emmy is. Let's get to know.
Emmy, you've been unmuted. Just give us something that you've learned today, found valuable. Any questions you've got on anything?
Hey guys, Ninja, this is Emmy, Iman on Instagram. I just popped in.
Hey.
Yeah, hey.
What's
yeah,
up?
host the moon and all that. I literally only just jumped in, sorry. Like I totally forgot, so I thought I'd try and catch up. So I don't actually have any questions, but I'm happy to just listen to other questions maybe others might have, so I can still learn. This is up until 9:30, right?
Yep.
Yeah, ish. So just for the record, me and Emmy got connected through a mutual friend. So been Instagram homies for a minute. And yes, Emmy, welcome to the show. This is Mr. Harding's Stock Market Fundamentals and Crypto Show. Every 8 p.m. to 9:30 p.m. Same link, Zoom link every week. Let's go for Mela Morgs. Who's this?
Mela Morgs, you've been unmuted. Once again, any questions you've got on anything you've seen, any questions on any cryptos you're in or anything that you're looking at?
Hey, so yeah, I asked a question about if you can give any websites where we can start investing in stocks.
Yeah, you can invest in via Freetrade, via Revolut, via IG.com. It depends on what stocks you're after specifically. Do you know exactly what it is that you're looking for?
Just like high-end companies, like probably like Tesla, Gap, all of those.
Yeah, no worries. What I'll do is I'll send you my links now on the chat, and you can use those to get yourself started. And again, I would highly recommend, if you've got me on Instagram, which is at IAMMRHARDING, drop me a message on Instagram and I'll do what I can to help you set up your portfolio.
Please, thank you. Can you just drop your Instagram in the chat as well so I can
I'll do that now.
Find it.
Just to add my 2 cents onto that, Mela. I believe Freetrade to be the best beginner stock market app in the world.
Perfect.
In my opinion. So I would start with Freetrade, and yeah, please do sign up on Mr. Harding's link because you both get a free stock. But yeah, crypto question. Have you got a crypto question, Mela?
I do, So I heard that if a coin has a white paper, it means it's safe. Is that true?
No. Oh my God. Okay, that is terrible. I don't know who told you that. So first of all, let me define what the word white paper is. So white paper outside of crypto in a business sense is basically a document that outlines what a business does, what problems it's looking to solve, etc., etc. So that's the definition of white paper in general. Every cryptocurrency should have a white paper. If a cryptocurrency doesn't have a white paper, don't invest. Do not invest in anything that doesn't have a white paper. There is approximately 9,500 cryptos and counting, and almost all of them, 99% of them, should have a white paper. So the fact that it does have a white paper doesn't mean anything. You need to read the white paper.
Okay, cool. Thank you for that.
I think this is so scary. That's one of the worst things I've ever heard.
Wait, I have one more as well. I'm a person that invested in SafeMoon.
Okay, cool.
How do you feel about that coin?
I also invested in SafeMoon. However, I only invested like £100. What was that? A while ago. So that's up. I don't even check it. But basically, if you are going to invest in any meme coin or anything that fundamentally doesn't mean anything, like Dogecoin and SafeMoon and all those memes, please make sure it's a small proportion of your portfolio and you are willing to lose everything on that investment.
Okay, can I you know, like how SafeMoon, like it shot up and then it came back down. Why? Because yeah, go on.
Economically speaking, and I want everyone to listen to this, it's very easy to understand. The economical reason why something goes up in stocks or crypto is because there are more buyers than sellers. So if there's 51% buyers and 49% sellers, the price will go up, right? But it will go up slowly. If the price shoots up by a lot in a day, that means there's a much higher percentage of buyers, say 90% buyers, 10% sellers. Now, if the price economically goes down when there are more sellers than buyers, so say if there's 51% sellers, 49% buyers, the price of the stock or crypto will go down, but slowly. The reason why you see things shoot up and shoot down is because there's like 90% buyers, 10% sellers, and then it shoots down because there's 90% sellers, 10% buyers, right? Or so something along those ratios. Of course, the price goes down because people take profits. Mela, if you purchase something for 1p and it goes up to 10p, then you're going to sell, right? And the people who came in at 8 or 9p, they're going to lose. Right? So understand that fundamentals are absolutely everything in this game. I'm going to say it again, fundamentals, you got to ask yourself, what does it do? It's not about the chart. The chart can always go up and down. Yeah. And you sound like a beginner with not much technical analysis. So always go for fundamentals first, and then look at the chart second.
Yeah. I'm just dropping a link to one of my friends who's made well over 5 figures in crypto. He's a multiple business owner, does drop shipping, all sorts of stuff. He does a great review on SafeMoon and what kind of things you need to look at when looking at a cryptocurrency. And again, if you want to learn about how to read and understand the fundamentals behind the crypto, definitely book in with either myself or Ninja for a free session. Or both. And yeah, highly recommend just booking in with Ninja for a free session to just kind of learn and understand the basics of how crypto is working and the basics of how the world and the space works. So we'll go to the next person.
I want someone we've never seen here before.
We've got This Is Signature. I don't know who This Is Signature is.
That's my boy. That's my boy. So he's welcome to ask a question.
Yo, can I ask? Oh, good.
Yeah, Ramon.
This is one of my boys.
Yeah, bro.
Let's go, Ramon.
What's going on? Quick question. Earlier you were speaking about let me get it, IDOs, ICOs, and EC something. I didn't get the rest of it.
Yeah, ERC.
Yes.
Say that again.
ERC20s and
ERC. Is that the network?
Yeah.
ERC. Okay.
Ethereum
cool.
network. Yeah.
All right, cool. And then second. No, bro, don't even worry about it. I'll research that. Second question. What's your relationship with like Pancake Swap? You heard of that?
Yep.
And a coin in particular, Safe Token. Saying that, ignore the Safe Token bit. Pancake Swap. Have you made any investments on that platform?
Yep. So you pretty much have to, if you're using any Binance Smart Chain stuff. It's the main Binance Smart Chain exchange site, just like how Uniswap and SushiSwap are the main ERC20. So again, layman's term, ERC20 is Ethereum network based. Binance Smart Chain is Binance based coins, things built on their network. But Ninja is more the expert on that.
Cool.
So I'm gonna go into ICOs and IDOs, and Ramon, I'll cover this 101 in our sessions. So the word ICO means initial coin offering, and the word IDO means initial DEX offering. They pretty much mean the same thing. Basically, it's comparable to IPO in the stock market, which means initial price offering, which is where you buy a stock before it's on the stock market. So ICO, IDO is where you purchase a coin before it goes in the market. It is extremely high risk and very difficult to successfully execute upon. I myself have never successfully gotten an ICO and IDO, though I intend on doing so. The way you theoretically do so is that you apply for what's called whitelists, but that's beyond the scope of this lesson. Yeah, that is a lesson in itself, how to get on ICOs and IDOs. And there is a theory behind on how to execute on them, but there is no guarantee. Like I said, I myself have never successfully gotten one, though I'm on the track. Mr. Harding, you've never gotten one, have you? You've never gotten one.
There's people in our team that have not even gotten one, got on multiple, and the returns are like 22,000%. A lot.
Like if you successfully get in a good initial coin offering, you can flip like £100 into 10 grand, but that's like very, very rare. Anyway, so for anybody that doesn't know, there's like a whole scope of cryptocurrency, decentralized coins, where you purchase crypto with crypto and not with pound sterling. So everything you purchase on like Binance and Coin, understand that once it's on Binance, once it's on Coinbase, once it's on a centralized platform, it's already relatively mainstream, which is why you'll very rarely invest in any coins on Binance and see 100x. It is possible, but basically those huge gains you hear when people like times their money by 100, by 1,000, is when you go on decentralized exchanges like Pancake Swap or Uniswap. But let's get another question in.
All right, let's
Safian.
You going, Safian? Hello, Safian. How you doing, bro?
I'm doing good. How are you?
All good. Yeah, hit us up with a question. Anything you're looking at, anything you took value from today's show, anything.
I took value from the REITs, obviously. Yeah, and just understood like how it worked and what the difference between you rather invest in REITs than property, and it's much more like profitable, obviously. My question was, you know how you said that crypto might get a bit more restricted or like a bit more regulation might be on it?
Yep.
Will it still be easy to invest in it?
Nope.
Oh, all right. So it's easy to take the advantage of it right now.
Yep.
Okay.
What happened with the stock market is they started increasing the capital gains tax, which is what Biden's already threatened. Yeah. But he's probably not going to actually do. Then the other thing that they do is they start doing minimums. So all platforms will start having to do minimums that you have to be able to get involved. So say, for example, like with IG, you have to pass like an exam, which shows that you know about whatever. You have to be working in a certain place. You have to have a certain amount of money in your bank account. And then you have to have a minimum of 10,000 to 50,000 to be able to even get started.
All right.
That's what's going to not potentially. That is definitely what's going to happen eventually with crypto.
Oh, okay. Thank you.
We've got a question from Ravi. What are your guys' thoughts on when you're expecting the end of the crypto bull run? Would any exit strategies closer to then, or are you planning to hold everything throughout the bear market? Ninja, you can take that one first and then I'll give my answer.
Yeah, sure. Okay. So I personally only believe long-term in 7 coins. I may change my mind in the future, but basically I came up with my own kind of 6-tier risk and reward system in crypto. There's tier 1 with the lowest risk and the lowest reward, and tier 2 with slightly higher rewards but more risk. So tier 1 for me is Bitcoin, Ethereum, and Litecoin, and then tier 2 is XRP, Binance Coin, Cardano, and Polkadot. Every other coin, in my opinion, though I can change my mind, has extremely high risk. So with regards to, okay, what are you guys' thoughts on when you're expecting the end of the crypto bull run? I hate giving dates. I honestly don't know when the bull run is ending, or if it will ever end. Let's be honest, like things can just keep going up, at least in those 7 coins. So my main kind of what I have already done, I'll be honest, I have already, because I'm lucky enough to invest in July 2020, I have already changed. I don't want this to be unhelpful, but I've personally already changed my life and cashed out crypto to the point where if my portfolio obliterates now, it's cashed out, like, because I've got this apartment in London and I bought some land in Indonesia. So what I can do, what I say to everybody else is, like, you wanna at least cash out some profits.
Yeah.
Some profits in USD coin and or pound sterling. So the worst case scenario, which I don't believe is going to be the case, Bitcoin halves or Ethereum halves, which I don't believe is going to be the case, or Litecoin halves, which I just don't think is happening. You've cashed out. So you want to make sure, like, the most practical non-financial advice I can give to an absolute beginner is, when your investment doubles, take out half, because then you've never lost. So depending on your risk for appetite, whether you want to wait for things to 3x or 4x, I typically speaking like to wait for things to at least 4x, because I don't invest in anything that I don't think is going to quadruple. And I'm usually right. When it does quadruple, I usually take out half of the value. So say if I invest in something for £50 and it goes up to 200, typically speaking, I'll take 100 off the table. So whatever happens, I've doubled my fiat investment. I hope that helps.
So my take on that is very, very similar to Ninja's, that when it comes to my investments, the moment anything has gone over 100%, I will take out my initial investment. So same thing as Ninja. If it's doubled, I'm taking out my initial investment. Why? Because after that point, it's free money. After that point, I'm making money. Anything else after that is a win. After that point, if the price drops, I don't care. I don't care. It's not my money in the first place. And again, then what my next rule is the moment something does 400%, I'm taking out a quarter of the position. Why? Because anything more than 400%, you're 4xing your money. It's greed. After that point, after 100%, really, after doubling your money, technically that's greed. After getting a 4x on your money, 400% return, if you are not cashing out after that and you're waiting for 500%, 600%, 800%, that's just greed, and you deserve to lose. Whereas then if something then gets to 10x, then I'm taking out half of my position, because that's wild. Realistically, outside of knowing about this space, where else are you going to get a 10 times return on your money? Nowhere. So why are you waiting for more than the 10 times return on your money? Because it's not real until you've taken profit. So at least take at least 50% of your position out once you've done a 10x, because that just makes sense. Why would you not do that? That's what the big corporates do. That's what the big guys do. And then also in terms of always leave a minimum of 20% of your position in the coin, no matter what. Whatever investment you've got, that's probably my biggest mistake that I learned the hard way, is I used to come out of positions like Tesla, like Bitcoin. I came out of them 100%. Never do that. Always leave a little bit in, so that in 10, 5, 15 years time, you can come back to it on accident and go, oh, damn, I completely forgot about that. Look what it's done. And that's what I'd say. In terms of a Bitcoin and altcoin crash, I'm expecting once the altcoin market cap, which is currently at around 700 billion, once that reaches around 1.7 trillion, that's just, I don't think they're going to let it get to 2 before we have a halving. So I think Yeah, well, just always keep an eye on the altcoin market cap. I'll just quickly pull it up on the charts now before we end. Hang on a sec. Just because historically and statistically, anything that goes up has to go down. Like, it just has to, because people want, and the people that have got the big money, which is the big boys, which is like your BlackRock and your Vanguard, they don't like buying things expensive. They're not going to do it. So they're going to do whatever it takes to get it for cheap again. So, so we can see I've already put the fib in on this. So here is the ultimate danger zone. As soon as we get to 2.8, that's where I'm expecting the biggest retracement of maybe 50% off, and definite regulation at that point, because that would have meant the 50% of that would have meant almost 1.4 trillion would have disappeared and been sold. Now, if that happens, there is no way they're not going to regulate the space. But again, I don't think it's going to be there. I think it'll probably be anywhere between here, 1.6 and 2. Because then that will be major headlines. If it goes from 2 trillion to 1 trillion and they can print and scaremonger everyone, 1 trillion was lost on the cryptocurrency markets. Oh no, loads of people lost money. It's over. It's terrible. That's what they're waiting for. It's the perfect news story. So yeah, that's my opinion on that. Coolios. Thank you everyone ever so much for tuning into today's episode. I think this is probably one of the best episodes we've done. Really appreciate everyone that's told a friend to tell a friend. Again, we're going to be back same time next week, 8 p.m. Please bring along a friend, because the information that we're providing is literally life-changing.
Please do a story for Mr. Harding right now.
Oh, please. I would actually really appreciate that, because right now on IG, I'm just not really getting much traction for this value. And I would love you to find someone else that's going to share a REIT portfolio with you and even explain about REITs. So as a favor, please take a picture, put it on your IG, tag me in it.
Yo, we need to make goals. Like, we need to make goals. Like, this needs to get 50 plus attendees per lesson soon. This is way too underrated. What is the record for participants of this show?
25.
25. Okay, we got to beat that. We got to beat it. Let's beat it next week. Let's get 30 people next week. I'm gonna do everything I can.
Everybody's one friend.
Can I recommend something then?
Yeah.
Because a lot of people who I try to speak to about cryptocurrency don't know anything at all. So if I was to say next week, Monday at 8 o'clock, there's a beginner's intro to crypto, that'll probably let them in, as opposed to something which is a bit more complex, if you know what I mean.
Yeah. Friends want an intro to crypto, chat to me personally, and then I do those. It's just
of course. Go on.
Yeah, with this show, like, this show is all about Mr. Harding breaking down what happened last week. Like, It's all about up-to-date information. That's the kind of premise of this show.
Yeah, and I'm cool with that, but my friend that has no idea about anything, so it might be a bit too, in depth for him. Do you know what I mean?
Now, I always do a little bit of financial literacy, like I did here. So there's always a bit of game. So, but yeah, I'm gonna try and I'll tailor the marketing a little bit more so that it looks a little bit more user friendly, beginner friendly. Thanks for the advice. Really appreciate it. Once again, guys, if you can, please take a picture, share on Instagram or Facebook, tag us in, and just let people know. I think I would like to say that it's kind of fair for the value that I've shared and time that I put into making the presentation week in, week out. I don't know if you think it's fair, just a little picture, but so yeah, thank you very much, guys. We're going to be back next week. Unfortunately, no daily calls at 2:30 p.m. They're probably going to be at 6 p.m. I'll keep you guys updated in the WhatsApp group and on Facebook. Thank you very much, guys. See you later.
See you later, guys.
Bye.
Bye. Thank you.
Cheers, man.
Bye. 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 Wait. And then Ninja, if you stay on till the end.
Yeah. I want to have a little chit chat with you. Bro, I actually have a working laptop now. Remember all those Zoom calls on my phone only? Now run the laptop, baby.
Harsh life.
It's good. So we're gonna have to kick Calm out. This is my boy. Do you remember Calm? Andre Soul's little bro.
Yeah.
Oh sure, yeah, I think so, man.
What's good? What's
Bro,
good? Bro, you need to get your brother on some of these calls.
Hold up, one sec. Same, bro?
You definitely need to get your bro on some of these calls.
Yeah. Now I'm after. You know who's more, not Dre, my bro just above me. He's more on this than me. He's more on this than so.
Oh, see, all right, cool. Yeah.
I was told Ninja knows Koet. Ninja knows Koet.
No,
Ninja knows Koet.
No, I don't.
You know of him.
Wait, so
I've mentioned my bro to you before.
Oh, right. So your bro's on crypto more than you?
No, not more than me. He's as much as me. Not Dre. When I was talking to you before, and I was saying, "Yo, my bro would want to join the da." It wasn't Soul that I was talking about. It's my other brother.
Okay. Okay. That makes sense.
You know what I'm saying? But I was gonna say though, quick question. What do you man think of well actually, boom, I'll break it down, but ask one to Ninja, ask one to Harden. I'm gonna ask Harden first. What do you think of where do you see the Coinbase stock going?
1,200, and then it's going to do a stock split, and it's going to go to 120. So stocks. Do you know what a stock split is?
No.
So a stock split is when the price is too big. So what they do to make it more attractive to investors is they split the stock. So say for example with Coinbase, it's going to go to 1,200.
So they make
everyone that's got one share for 1,200. They will now get 10 shares in the stock split for 120 each.
Oh my God. I didn't even think about that, bro.
That's mad.
Yeah, they did it last year, bro.
Mad.
This is why this Tesla thing is actually a joke, you know, like Tesla went up 800% and did a stock split. Apple went up 200% and did a stock split. So people have been making way more money than it looks like people are making in the stock market, because it does stuff that like crypto can't do.
Right. So you would advise get a whole share when you can straight up.
Yeah. It's
shares.
Coinbase is a long hold. Like Coinbase isn't like a flip. Coinbase is an actual investment. Like you're investing into your boy's business and it. Like just imagine your boy came to you and he was like, "Look, this is my thing. It's called Coinbase. This is what I do." And then he showed you the numbers that he was pulling in and the amount of like cash flow, the amount of people, whatever. Would you invest in? Would you give him a little 250 and go, "All right, cool, hit me up in 10 years and let me see what you've done"? You would.
Yeah.
That's it. So you just put in, hold, leave it.
Straight. That's why I was that's why I was asking stuff. First. Yeah. Okay. I got you.
No worries, no.
And then boom. So crypto question for Ninja real quick. What do you think of Chili's, my bro?
I think Chili's is a very, very good investment, especially for the long term. Obviously, from what I know, it's the leading sports token for cryptocurrencies. Obviously, highly involved in the football space. I'll be honest, when it comes to actual investment, I've only put down £120. I invested about, how long ago was it? About 6 weeks ago. Haven't looked at the chart since, mate. So you tell me how if you can tell me how it's doing in the past 6 weeks, then I mean I'm pretty sure it's gone up. Like I really stress this. That I really don't check the charts that much.
For the past. I've been in the same for the past week and a half, 2 weeks. I've been in the same boat. Like I ain't really looked at the charts per se like that, because since it's just been going down, I've been like, you know what, Let me just leave it there. I'm not gonna do no mad moves. Let me just do more research more than anything else, and just throw more games. You know what I'm saying?
The thing is, all I see with Chiliz is adoption. Like, you know, I see on my Twitter feed, like I see adoption. Swissborg have adopted Chiliz. There's been a new. I don't know if you saw or not, but let me tell you the reason why like what made me invest in Chiliz. So I heard good things, and then I got an email from Binance saying if you there's a new Chiliz and USD trading pair. If you trade £100 worth, you get free Chiliz. I was just like, oh yeah, let me just do that because I was going to invest anyway. So it's £100 worth, and then they airdropped me £20 worth of Chiliz. That's what I've been sitting on.
Did
you participate in that airdrop or not?
I didn't really know.
All right. Watch out for the Binance emails, bro. Like, Binance airdrops are sick.
I didn't even know about them myself.
They just say sometimes if you. Yeah. As in, that offer's now gone. But I'm saying watch out for Binance emails because they do a lot of airdrops. For example, like they did an airdrop with Spark Point or something. I didn't heard about that. Yeah. So that was literally out in December. Like all you had to buy was £25 worth of XRP, and then the airdrops that I got because I invested in XRP in December 2020. I didn't want to because I was hearing the whole SEC thing, but anyway, I did just for the airdrop, and the airdrop got me £14. So yeah. Have a look out for when Binance do airdrops because every time it's been worth it. When they say buy this amount of coins so you can get free coins, it's just worth it.
I'm with you.
And I think it forces the price to go up because millions of people get that email.
Yeah, and it gives them an incentive to get onto it. Yeah, and my cousin made a mean flip off XRP as well. Yeah.
Trust me. But yeah, I know I owe you a conversation, bro. Like, it's not even a personal thing. Like, man's gonna get on you tomorrow, innit?
It's hard. It's calm, bro. It's calm. Get man's busy and that.
Yeah.
Hold tight.
No, bro. Take care, man.
Yeah, but bless up. You like to. Bless. Thanks, Harden, as well.
Bro. Bless up. In a bit.
Stay safe. Oh, Mr. Harden, let me just say straight away, fam, you missed out on the opportunity for donations today, man.
I know. I was gonna do it, and then I was like, nah.
Why not?
I'm not gonna ask.
Why?
Is that my ego? Yeah, it is, isn't it?
Bro, you could have just made. You could have. Free money, man.
Yeah, I know. I need to.
Bro, it should be that at the start of the call. Like, literally, it should be, these calls are free, donations welcome. And then literally in the chat is
the donations.
The donation links.
Oh,
that should be said at the start of the call.